What's up everyone, it's Austin Rutherford and welcome to my channel where we talk all things business, finance, and real estate. Most people say that to buy a house, you need a 20% down payment, which can be a lot of money. Other people like Dave Ramsey say that you should never take on debt of any kind. The problem with that is, if you never take on debt, how are you supposed to ever fulfill the American dream of home ownership? So in this video, I'm gonna break down the reasons why debt can be a very good thing if used the right way, and how you can buy a property, a house, with very little to no money. So before we get started, if you can smash that like button for the YouTube algorithm, it'd be greatly, greatly appreciated. So the beautiful thing about living in the United States is that they allow you to use debt leverage to finance properties. So let's take, for an example, a $200,000 house. You wanna go out there and you wanna buy a $200,000 house for yourself or your family. There's some things out there, which we'll get into in the rest of this video, where you only need a 3.5% down payment. So you only need $7,000 to pay for a $200,000 house, and then the bank will go out there and finance the other $193,000. Now this goes 100% against Dave Ramsey, which says that you should never have debt. The thing is I have over $10 million of debt to my name. So as you can see, I obviously do not follow those practices because debt can be a good thing if used the right way. So on to the next thing, where people say that you need a 20% down payment to buy a property. So there's 4 ways in today's video, which there's many more after that, but 4 ways in today's video that we're gonna show you how you can basically buy a house with significantly less than 20%, sometimes even no money down. So the first option is a conventional loan, which usually go down to as little as a 5% down payment. So if you're buying a $200,000 house, you need a 5% down payment, which in other words is $10,000 down. Now, you do need to have above a 620 credit score, as you can see right here from Rocket Mortgage. Another option is what's called an FHA loan. So if you have above at least a 580 credit score, then you only need a 3.5% down payment. So again, $200,000 house, 3.5% down is a $7,000 down payment, and then the bank will come in and finance the other $193,000. The third option that may be available to some of you are VA loans. So if you're a veteran, there's different ways that you qualify, so you would have to talk with your rep, but if you do qualify, a VA loan can fund 100% of the transaction for you. The fourth option is what's called a USDA loan. Now there's a lot of requirements to get this one. This is a way to get basically a house with very, very little to no money, but the house has to be in a specific type of area for this to happen, and you have to have certain household income qualifications as well. So it's not for everybody. The VA loan and the USDA loan is not for everybody, but the conventional and the FHA loan are for 99% of the people out there. And that's only 4 ways. We're not even touching on the creative ways, the subject twos, the private money, all these other ways where you can get properties 100% funded using none of your own money. So if that's something you're interested in learning more about, you can check out this video up here on the top right as well. So let's break down some numbers so you know exactly how much money you need to go out there and be able to buy a property. So we're gonna use the same example of a $200,000 house. I know we said we can get as little as a 3.5% down payment. Let's just go with 5% just for easy round numbers. So a $200,000 property with a 5% down payment is $10,000 you need to be able to go out there and buy that property. So I'm gonna show you a transaction that I actually did for $220,000, because on top of a down payment, you do need what are called closing costs and prepaids as well, which vary from deal to deal, from state to state, from transaction to transaction. But just to put into perspective for you, I wanna show you a real transaction that I did for $220,000. So as you can see on the screenshot, the total closing cost that I had for this closing was about $6,500. And as you can see at the top, one of those, the bigger part of that transaction, was a 1.9% point that I had to pay to get this loan. The only reason that I did that is because I wanted to buy down the rate. I don't recommend you guys doing that because I personally would rather have $3,100 more in my pocket. Looking back on this HUD, I didn't even realize I did that, but I would not recommend doing that, which means that the total closing cost would have only been like, $3,700, give or take. Which if you break that down, that's about 1.5% of the overall purchase price. And then we also have what are called prepays. So these are things that you pay ahead of time to be able to get the loan. So some things like insurance, you gotta prepay. Some things like property taxes, you gotta prepay. Other things like interest. So here's a quick little hack for that. If you close on the 2nd of the month, you need to prepay interest for the rest of that entire month. Versus you closing on the 30th, you only have to prepay that interest for literally 1 day, So as you can see on my HUD here, my prepaid interest was only $24.46 because it only calculated for like 1 or 2 days. Now, if it was the entire month, it may have been pushing close to maybe $1,000 or a little bit more. So all in all, on the prepaids, it was another couple $1,000s to get this transaction closed. So total money that I had to have for this transaction for a roughly $200,000 house was a 5% down payment, $10,000, a 1.5% roughly on closing costs. Again, that number changes from transaction to transaction, state to state, etc. So this is just a rough ballpark of what the real numbers are. So 1.5% of the overall purchase price and roughly 1.1% in prepaids, but this can vary drastically depending on the day that you close this property of the month, because there's different types of prepaids involved with that. So totaling all that together, you're going to end up paying roughly 7 to 8% of the overall purchase price with some variables in there. So for this deal, totaling about $17,000 that I had to bring to the closing table for a $220,000 purchase price. Now you might be sitting out there saying, well, like Austin, you know, $17,000 is a lot of money. And I get that, 100% understand. It was a lot of money for me when I bought my first house. I get it. But the largest asset that people have for wealth, when they divorce, when they die, when they get an inherited property, whatever it is, the largest asset 9 out of 10 times is real estate. So if the best way that most people build wealth is through owning real estate, you can't tell me that there's no way in the world that you cannot save any money. Even if it's a $100,000 house, it's gonna be significantly less money out of pocket for you because it's half the price of the example that we just gave you. So I get it. It is expensive to be able to go out there and put that type of money down on a property, but it is the single best way to build real wealth for you, your family, your kids, and your kids' kids. This is literally how you build a legacy. It's how you pass down wealth to your family. And the craziest part is I just broke down for you how you can buy a house for very little money, 5% down, a couple $1,000s in closing costs. What if I was to tell you there's a way that you can literally get a house for free? You can own a piece of real estate without using any of your own money. No closing costs, no prepaids, no down payments, none of that stuff. You probably wouldn't believe me, but I've been able to do it almost 100 times now in my career, and that's what's allowed me to be financially free. So if that's something you're interested in learning more about, you gotta check out this video up here on the top right. I'm gonna break down penny for penny, step for step, the exact same process that I've used in my career over the last 7 years. So if this was valuable, make sure you smash that like button for the YouTube algorithm. Drop any comments or questions you have below. I promise I'll get back to you. Hit that subscribe and notification bell as well so you can get all this content going forward. As always, appreciate you being here. See you on the next one.